Good evening, everyone. I'm just going to share my screen and make it bigger, the slides bigger. Here we go. Can you see my screen, Cheryl?
Yep, I can see your
Yep.
screen.
Okay, great. So understanding the mortgage process, that's what we're going to go over today to show you what steps you need to take in order to get a mortgage. So step one, the interview components of pre-qualification. So the first step is to get pre-qualified. Lenders are going to be looking at your credit. For our bank, we require a minimum of 620. So we ask that sometimes you look up your credit score and make sure that your middle score will be 620 because we do not take the high, we don't take the low, we'll take the middle of. And you can actually get a copy of your credit report and a credit score at freecreditreport.com. I believe they give you every year one credit report. We also take a look at your income. We do require a 2-year work history. And if there is gaps in employment, we ask why. Also, if you're changing jobs and there's gaps or there's no gaps or you're changing from one type of job to a different one, we also ask for explanation. We also look at your assets to make sure that you have sufficient assets for down payment, closing costs, and reserve requirements. We don't have any reserve requirements, which is a good thing. Uh, for Palo Alto, 5% is required by the city, and that is you need to bring in 5% of that. So we cannot help you with the down payment for your 5%. You can get a gift, a 10% max. That's okay. Um, but we do, again, verify assets. When we're looking to decide if you are a good credit risk, we're going to look at the 4 C's. Capital. The more amount of cash you have available, the more comfortable a lender is going to be reviewing your loan. So make sure that you know where you're going to be pulling your funds from. Is it a checking? Is it a savings? Is it a 401k, a Roth, stocks? This is something we'll need to know. What funds do you want to use? Also, your capacity. We look at your gross income before taxes. Again, the 2-year employment history. How much do you actually owe? Your installment loans, car payments, credit cards, child support, anything that you will come up on your credit report. So it's always good to pull your credit report so you know what we're going to be taking a look at. Your credit history. We're going to take a look at if you have uh, late payments, derogatories, disputes. We're going to look at that credit report in detail to make sure that you have a good repayment history. Um, Also, we're going to be taking a look at the collateral, which is the property. The good thing is that First Citizens Bank does have Palo Alto BMR documents approved, and we order a fair market value appraisal, which is good. And because we do that, there is no mortgage insurance that is charged with these BMRs. Here are some factors that make up your credit score. We get this question a lot. What goes into your credit score? Payment history is 35%. It's always good to be on time. We have seen the most negative impact on a credit score if somebody has a lot of late payments. So it's very important that you're not late on a payment. Amount of outstanding debt is 30%, how much you owe. The length of your credit history is 15%. Is how long has your credit accounts been established. A longer credit history is always better. It'll give you a better credit score. types of credit used. Do you have credit cards, revolving credit, installment loans like car payments, anything? The more types of credit that you have, the better. But it only is 10% of your credit score. New credit. 10% as well. That's like the number of inquiries. So a lot of people, if they have a lot of inquiries, that also can impact your credit a lot because it is 10% of that. So be mindful of when you're having your credit pulled because it will also impact your credit score. What is a mortgage? A mortgage is a secured loan using your house as security. You're providing a written promise to repay that loan to the lender with interest. What does the mortgage payment include? Principal, interest, taxes, insurance, and homeowners insurance if applicable. Mortgage loan products. We have conventional loans, and that is the 5% down for a Palo Alto BMR. We do have low rates. We have a program that can reduce your rate, and we'll go over that in another slide. This is the loan product that we do use for below market rate homes, just conventionals. There's also loans like in general, there's VA loans, USDA loans, FHA loans, home ready loans, community opportunity, but mainly we use conventional for BMRs. Because you need a down payment, and also we also have to have the BMR documents approved, and that is only through a conventional loan. Mortgage loan types, it's a fixed rate loan mortgage. This is the only term we use for below market rate homes. So no adjustable rate arms, although they're available. And there's also other types like balloon payment mortgages, graduated payment mortgages, incentive rate reduction mortgages, shared equity, and biweekly mortgage. Now, we only use the fixed rate mortgage for below market rate homes. Down payment assistance programs and closing cost programs. So we do have the ability to tap into the Federal Home Loan Bank of San Francisco, which is $32,000. It gets forgiven in 5 years. I did include the website on here. It is a 4-to-1 match loan. I'm sorry, yeah, loan program. It's a grant. It gets forgiven after 5 years, but there is income requirements, and it is not just income whoever's on the loan, but the whole household has to qualify together. And that is a separate submission to the Federal Home Loan Bank of San Francisco. So that's additional down payment of 32,000 because you have to bring in your 5%. Now, we also have a First Citizens Bank grant, which is $10,000. This one gets forgiven at closing and can be used for closing costs only. It cannot be used for down payment. And of course, it has income limits. Or you could take one or the other. The qualifications are both. The other one is the First Citizens Bank Forgivable Loan Program, which is $15,000, and it gets forgiven in 5 years and can be used only for additional down payment, not closing costs. So if you do qualify for one of the grants, you can only choose one or the other. We also have a rate reduction initiative that can get you up to 1.125 off the rate. Of course, there's also some income and property requirements on that one. Well, calculations, get worksheets. You can try to pre-qualify yourself, calculate your gross monthly income, if you're salary, hourly, commission, and then calculate your total monthly debt. Again, with that free credit report, you can see what monthly debt is reporting, like car payments, credit cards, everything that's reporting on your credit. Now you can calculate your housing payment. If you don't know how, we can help with that. But the housing ratio is the house payment divided by your monthly income. Debt ratios, the house payment plus all debt divided by your monthly income. That's how you're going to find out what's your debt ratio because you want to know what's your housing ratio and what's your debt ratio. For us, we get a question, well, what is your max debt to income ratios? And it's 50%, which is really good. Unless you're trying to get the Wish $32,000 program, that one we have to have a 35% housing ratio. But if you don't qualify for that one, we can go all the way up to 50%. Um, and then a loan to value ratios. The loan to value is the loan divided by the home value. And in this case, we use market rate value for the BMR homes in Palo Alto. So we don't have to charge you mortgage insurance. And that's how it works. Step number two, getting pre-approval. So pre-qualification is verbal, just information. But a pre-approval, this is the stage that the loan officer will require that the consumer provide all income and asset documentations to determine mortgage qualifications. Now, we are going to ask you for a lot of documentation. We're going to pull your credit. It's going to be a hard pull on your credit score. So it is going to impact it. We're going to ask for items such as bank statements, tax returns, pay stubs, W-2s, and we will also submit it to underwriting for review. So this way we make sure that we have done all our due diligence in your pre-approval process. Step number three, now that you have our pre-approval and you get into contract, then we need to start the application process. And now that we have a property, we can go ask for additional documentation. Say, for example, 30 or 60 days have passed. Now we need updated documentation in your file, and we have to resubmit for underwriting review again with a property. And then that's when we also order anything else like condo reviews or appraisals. Processing. Once you get into a contract, we update your file, you get a loan estimate. We have 3 days to give you a loan estimate. Then we order the appraisal, condo review, and then it goes to processing. Now the processor will examine again, your loan, everything, and make sure that we have everything in there, especially verifications that we are going to be needing, title items. So they're going to just give it another overview before submitting it to underwriting. Then the processor will submit it to underwriting, and then the underwriter will either give us a underwriting conditional approval or they'll ask for additional items. It just depends on the underwriter. Underwriter is also responsible for reviewing the entire package and issuing approval. They're actually the third set of eyes of reviewing everything, and they're the ones that are signing off on the risk for the bank. If questions or concerns arise, the underwriter can approve the loan, but make that approval subject to additional documentation. So when you get a conditional approval, that you will get a list of items that are needed in order for the underwriter to clear the file for closing. So once your loan is approved and it's cleared to close, then we'll have the final commitment letter and the file goes to the closing specialist and contacts the title company. Will contact to make sure that the doc specialist sends docs out and closing disclosures. So closing disclosure, that needs to be sent out at least 3 days prior to closing. So it's very important that the closing specialist and the doc specialist are working close together to make sure that that happens. And then documents are sent to, it says here attorney, but it's actually the title company. And then the title company will call you, make arrangements for you to sign the documents, not just our documents, but also the BMR documents. And then typically the next day we fund, and then typically the following date they record and you get your keys.